Well, good day, all. Ira Epstein, and here we are with your SPDR ETF stock market review. And this is for Tuesday, the 22nd of July, 2025. As you know, I'm out of the studio for several days, could be a week or more, and we will see just where we go, but I'm able to keep these up for you, and I enjoy doing it. In terms of market action, this was a switch around day. Stocks that have been strong are giving up gain. Stocks that have been weak coming back up. It's called rotation. And that is a healthy event. That is not a non-healthy event. Although some are arguing that the momentum in some of the big tech stocks and the like is waning and being masked by what is going on. That may well be the case. The president today in an interview was talking about Jerome Powell again. He doesn't think he'll fire him, as he said. I don't think he has any grounds to fire him. It's that simple. Congress is going on an early vacation. They don't want to give up the Jeffrey Epstein tapes. I don't get that at all. But they don't want to give anything to the Democrats, so they're out till September. Yeah, they're on their summer break right now, so don't look at anything any longer coming out of them at this point. Tomorrow, you're getting the Mortgage Bankers Association. They'll update everything at 6 a.m. The existing home sales data for June, that'll come out from the NAR, the National Association of Realtors. At 9, we'll get petroleum estimates. Tariffs, the president announced 2 deals, Philippines and Indonesia, taking tariffs in both countries down from 32% to 19%. But again, understand this, we're going to be getting money in from these countries, and that is the president's goal. In terms of market action for toast, I'd like to get more of a break in the market for you to come into. The market is breaking out of what I call this sideways action. I think you can almost see it here. There's my hairpins, and here. Market had it leap, left the market down here, and has never retraced. I don't think it's going to in the near term at all. You can see the pattern on the swing line has higher lows, higher highs. That is bullish. The market is over the 18-day average of closes, which is over the 100, which is over the 200. It's a bull market setup. In terms of the resistance, it's very clear. It's the upper Bollinger Band. You've hit it now for 4 days in a row, so I term that the gorilla glue trade, where the market is just marching with real strength to the upside, and you're overbought. So you either are going to embed or you'll get a correction from here. Either way, neither one of those are yet setups, as I see it, to just jump in and be long. In Netflix, I expected a pullback, and you're getting it. Yesterday's rally was nice, but it didn't change the fact of anything, and the market's still breaking down. You're getting into a support area. I'd be curious to see how it's going to do everything here, but we're not there for you just yet. In Dash, the market keeps fighting at the 18-day average of closes now in a very narrowing Bollinger Band. So it's setting itself up for something. I would say any move that gets itself up and over 240, 265 could act like one of these meme events where you get higher lows, a higher high, and you're up at the Bollinger Band before you know what's going on. Google, you heard me talk about it yesterday, and what I said, I'm going to stick with you. Don't expect them to be left in the dust by OpenAI, by ChatGPT. They'll have their own, and they'll do just fine with it. You'll see they're too big to give up their market share. In Starbucks, back up to the upper band. So what you have here is a market that is just whipping the traders. You have this big break area. You came up yesterday. You had an outside day to the downside. Now, if you've taken my course on outside days, you will see that when they occur, like you did right here, if you jump up to through that day's high the next day or so, the market often goes to the closest either moving average or Bollinger Band. In this case, it did both. And it's a bear trap. That's the way to look at it. Yes, a bear trap. And I don't think it'll go very far because you're already over the Bollinger Band, but trying to be short this market, people just got hurt. Robinhood, I've been waiting on a break in the market, and I'm looking at the 9,700 area with great interest. The 18-day average is going to jump tomorrow. Now, the last break low was right here at 97.16. If you look at the moving average, 94.72, 95.96, 97.02. So it's jumping $1 a day. So it's going to be up closer to 9,800. Tomorrow gets to be interesting in the market. The pros might look at it there. I don't like that when the market's overbought, though. I like it when the market has both the blue and the red underneath the 70 level, not being in overbought territory if I'm telling my subscribers to buy. So I'll probably wait on that. I like what Tesla's done. It's gone literally from the lower Bollinger Band, you can see that right here, to the upper band, and we'll see what it wants to do from there. In terms of stocks, so yesterday I was mentioning you had gotten up to the upper band. This should be a resistance area, and bingo, you're right back to the 18-day average. And you saw today, the chip stocks were giving up quite a bit in the marketplace. As I said, it's a rotation going on. And when we look at financial services, I'm not looking for much more correction, but we don't have a good chart pattern to trade off of. I think the 18-day average of closes, this red line, is where the market's going to fight its whole battle. On the industrials, I'm looking for the 18-day average to be hit, probably at a slightly higher level, but I am looking for that as you've lost your way with the upside momentum. You lost the bullish embedded reading here, and you could not get it back today. So it has to rebuild. I'm not bullish that it's just going to go straight on up any longer. On the energy sector, the market's just looking at everything at this point in time and watching energy prices fall one more time. And I think it's just wondering what all these tariffs are going to do and where it's going to show up. I think it was a wake-up call today, too, when you saw the GM had lost back about $1 billion due to tariffs. That doesn't mean they lost money, but what they did is they didn't make that money. And if it's them, what about the others? And while I hear everybody saying, oh, these companies are going to just do nothing, and the market's going to work with us, and don't worry about it, I think you should worry about it. I don't know what more to say about that. Somewhere along the line, somebody's paying for these 19, 20, 30% tariffs. And I think at the end of the day, it's going to be the U.S. consumer. In GLD, is this where the market's realizing the inflation the tariffs are causing, and you're breaking out of the sideways action? Could well be. This market, I would not be short. Yeah, on the pullback, I told you what I was thinking. Still bullish. Sideways action could be a false move, but you don't want to be bearish, in my opinion. Silver market, I like better than gold. I've said that over and over in my special reports and so on. It can catch up here. Silver, you can take physical silver near $50. That would be its high. Remember, it's well off of that from how many years ago? It's unbelievable. In the copper market, another market that I don't want you to even think the short side of. And the reason on the miners is I realize that the miners got a problem in the sense of the copper, how do they get their new copper to the U.S. with 50% tariffs? However, there's a tremendous amount of copper that was sent to the U.S. Our stockpiles came up in the U.S., and I think you have to look at that and realize that anything here at these increased prices, copper's gone up since President Trump said a 50% tariff rather dramatically per pound, and they're going to reap that reward. And I think the market's looking at it. Do I think this break to the downside has run its course? I do. Do I think it's ready to be bought? Well, you have to be a subscriber of mine to find that out in the morning subscriptions. Here we have a lower low, higher high, and the market is now coming of the mind that the very next move in interest rates is down. I don't know that that's true. I don't see why it can't just hold right where they're at. So I don't join with all the traders on that. In the dollar, we're trying to find out an answer. Is the rally over? Or is the market stronger than we think? The last break low just recently was 27 right here. What is that number? It is 27.08. Today you hit 27.09. I'd like to see that end. And what have you really done? You've gone from the lower Bollinger Band to the upper band and back to a neutral spot. You really don't have a story here. And in the FXE, you did a reversal. You took the market through this high, and now you've ended the downtrend. So that's formally ended, but it too is caught in the sideways action. So I'd be a little bit cautious right here. Currencies move beautifully once they set into trends, but you got to set them into the trend. I want to remind you all that to keep up with everything that we're doing, all you have to do is click on one of these links up here. You can then go and get our free offers. You can even try my free advisories and so on. Or you can go, when you're on the website, to what area? Research, sign up there and join with me. I'm Ira Epstein. You have yourself a great evening. I'll catch up with you all this week. Take care.